how do we make Solana the place where on-chain price discovery takes place. I do think that if Sol can somehow become the place where on-chain price discovery takes place for other crypto assets, that can drive meaningful amounts of volume and revenue back to the network.
This episode is brought to you by Sablier, the leading on-chain solution for token distribution. You'll hear more about them later on in today's episode. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of Lightspeed. Today, I'm joined by Carlos from the Blockworks research team. Glad to have you on, Carlos. How are you doing today?
I'm doing great, Danny. Thanks for having me. I think it's just the two of us today because Dan and Ryan are both at breakpoint, and I'm definitely feeling a little bit of FOMO, but it is what it is.
Yeah, for sure. I think this week with breakpoint, definitely an exciting event for Solana, the broader Solana ecosystem. So us, unfortunately, we were not able to make it there this time, but like you say, Dan and Ryan will be there. Hopefully we'll have Dan on the show next week. He can talk about kind of all things breakpoint, but also talk about something that he should be unveiling by the time this episode comes out, which is the Lightspeed investor relations, or the sort of the Blockworks investor relations portal. I think sort of titled or branded Lightspeed in partnership with Solana. As the launch of this kind of dashboard product to offer up services for investors, protocols, funds, etc. For investor relations purposes for protocols, in connection with those various groups. So this is something we're really excited about. You should see some threads, probably some clips of Dan Smith announcing and speaking about it at Breakpoint. And hopefully we'll have him on the show next week and he can maybe dive into some more detail. And we kind of discuss all the nitty gritty there, how that plays into what we're doing at Blockworks, what we're doing, and maybe what we want to talk about here on Lightspeed, and maybe different things that people in the Solana ecosystem are thinking about. So excited to see more and hear more about that over the coming weeks. But yeah, we'll jump into that hopefully more next episode. For now, though, while I have you, Carlos, at Blockworks Research, you spend a fair bit of time covering Solana, of course, doing monthly notes, covering the ecosystem and the asset. I wanted to dive into that a little bit. You just put out your most recent November note on Solana, and I guess there's, I think, plenty of different things we could jump into, but I don't know, maybe give some high level, like what are some of the key takeaways? And we can go from there.
Yeah, for sure. So I think starting with the financials, if you look at REV or network revenue, Solana had $27 million of REV in November, which is the lowest figure since February 2024. So Solana has now seen 4 consecutive months of declining network revenue. And what we've seen over the past few months is this shift in market microstructure where transactions are increasingly favoring priority fees as opposed to JITA tips. So while priority fees decreased 58% since July when JITA's ban was announced, JITA tips have decreased by 85% over the same period. From around $45 million per month to just under $7 million in November or last month. So I think this sharp decline is really worth paying attention to because it points to a market structure where MEV kind of becomes less important, or maybe not less important, but more competitive now with the entrance of Harmonic, and priority fees are being increasingly favored. And I think the other side of network revenue going down is that we have not seen the same decline, or at least not to the same extent, with applications. So application revenue has actually remained a lot more resilient. And if you look at if you plot network revenue versus application revenue, what you see is that the ratio between application revenue and network revenue is at an all-time high. So at the beginning of last year, applications on Solana, like combined, were earning around $1 per revenue per every dollar in network revenue for Solana, right? And in November, applications on Solana are earning about $3 per every dollar in revenue in network revenue. So that kind of has 3x in the span of um, 22 months. And I think it points to a greater trend of applications increasingly capturing more of the value uh, capturing more of the value. And for me, the question is if this will reflect in the valuations, right? Does this mean that the L1 premium will compress over time? And that the better opportunity for investors today is maybe at the application layer, because if applications will capture the majority of the value, then it could be logical to think that valuations will eventually reflect this.
Yeah, I think this makes a lot of sense. The point you make there about this transition from network to application value, and I feel like this has been a topic of conversation maybe for the past maybe for all of 2025 really, has been about really these kind of core or major applications driving a lot more revenue, and then potentially driving up their valuations. At least on Solana, I think anybody could maybe pick out some of those big names like a Pump Fun or a Phantom. Plenty of other examples, I guess. Or was sort of all over the timeline lately, over setting new revenue highs day after day after kind of pivoting their model to more of a casino slot machine design, which drove lots of activity there. So yeah, I think it's an interesting call out. I wonder, the relationship there between, for example, we've seen network RAV decline. We've also seen, of course, application revenue has come down as well. But to your point, not as sharply as RAV has declined, such that ratio has been increasing. It's interesting you note the decrease in Jito tips, for example, as a part of that rev statement. I do wonder if maybe part of this as well is some of that competition and pricing that was going to Jito tips is now being maybe more reflected at the application level, or does this kind of set up the future for something like ACE to take even more hold, where you might see more of that value even continually drive even further towards the applications, rather than these other kind of high competition over like a Jito tip, for example, outside of the network.
Yeah, I think it's a mixture of factors. I think one, ANSA has done an amazing job improving the Agave client, and you've seen just improvements in efficiency where priority fees are just more efficient today. I think the other thing is you've seen kind of this change in on-chain activity. Whereas if you think about January, for instance, the majority of DEX volumes were being derived from meme coins. And the meme coin game is all about being early sniping, and you have a bunch of contentious transactions, and that necessitates like a Jito tip to be first, right? So you have more of a need for Jito tips. Whereas today, most of the volume is coming from the Sol USD pair, specifically prop AMM volume, and that has a significantly different profile than meme coin trades, which usually have higher bips per trade, right? So I think it's both more network efficiency and also a different DEX volume composition, because at the end of the day, the majority of REB derives from trading activity.
Yeah, I think that makes a lot of sense, and maybe part of that story as well. And I guess looking at this data here, kind of seeing that we saw lows in trading activity in March and June of this year, kind of in aggregate, and they've actually increased since then. But the majority of that increase has come from Sol stablecoin pairs, and I think that makes sense given some the conversations around prop AMMs and them being able to drive a lot more efficiency into those kind of more liquid markets, and then therefore also a lot more trading volume. And I know that, for example, like Humidify, we've seen like one data point that they recently have done more volume on the Sol USD pairs than like Binance Spot, for example. So that's probably a core part of that trend is, like you said, big drop off in meme coin volume, but a equally pretty large rise in like the higher liquidity, largely Sol stablecoin, but higher liquidity pairs as well. So just complete shift there. Maybe looking outside of the trading, I'm curious. I know there's a new proposal floating around in relation to the inflation rate. And I guess I'm curious to get some details there and understand kind of what are the considerations, kind of why are we back at this? I think there was a proposal last year to lower the Solana staking inflation rate that did not pass. And so we're working with the new proposal. Like what's different? What do you think likelihood of success here this time is, and what are your thoughts?
Yeah, great question. So I think like CMD228, just for a little bit of context, failed earlier this year. I think one of the main like pushbacks against CMD228 was that it was too complex, and it was very hard to predict Solana's inflation rate based on the like market-based inflation mechanism that they were proposing. CMD 411, which is the new inflation proposal, was proposed by Losting and Ichigo from Helios. And what they aim to do is just accelerate Solana's emission schedule by doubling the disinflation rate from 15% today to 30%. So this keeps the terminal 1.5% inflation unchanged. But this like simple parameter, what it does is that it brings inflation from about 4.10% today to 1.5% in 3 years. So about early 2029 rather than 6.2 years, which would be like early 2032. So importantly, what this does is it will cut about $22 million, 22 million SOL in additional emissions, which is about $2.9 billion at today's prices. So it kind of wants to reduce this like leaky bucket pressure that we see like with excess inflation, which is like honestly not needed for security today. And there are a bunch of like second order effects from the proposal that would probably be beneficial for Sol. So for instance, if you have lower nominal staking yields, then you can probably incentivize Sol usage in DeFi a little bit more. In terms of like the likelihood of this passing, I think that reception from the proposal has been positive so far, but it is still like early stage in the sense that it has not yet been put to a vote. And I think that the Helios team is probably waiting for the new governance tooling to be released for CMD 411 to be put up for a vote. So are you familiar with the new governance tooling?
No, maybe walk us through that as well, just for the understanding.
So after CMD 228, it was clear that stakers were more removed from the governance process than they should have been. So how it works today is basically validators can split their vote among distinct options if they choose. So yes, no, or abstain. But stakers don't really get a say, right? Like you kind of have like this representative democracy, kind of like in the US, where like validators ultimately choose what they vote, but stakers didn't have like a direct say on who they wanted to vote, right? So after CMD 228 failed, a meeting at Solana Accelerate took place in May and triggered a wave of work that basically wants to bring the protocol to a state where stakers can choose to take ownership of their own votes, overriding validators if they wish to. So there will be a new governance tooling released probably after breakpoint, like the timeline is still unclear, that would allow stakers to actually vote on their own behalf if they wish to do so. So this is one of the reasons I think that CMD 411 has probably a better chance of passing than CMD 228, because in CMD 228, you saw conflicting incentives between some validators. For instance, think about like institutional providers like ETF issuers or like centralized exchanges, where they are incentivized to keep nominal SOL inflation as high as possible, they don't even care if that's real or not, because at the end of the day, they just want to take a cut from that and just convert it to dollars immediately. So what you can see now is like probably stakers will have more control over that boat. And I also think that CMD 411 is much more simple. So there'll be a lot less pushback in terms of like how complex it is, because it's just this one simple parameter change. So Sol will remain like very predictable as it regards to the inflation rate.
Yeah, the point about complexity makes a lot of sense. I think that is generally a good heuristic for a lot of things. Like even when it comes to making an investment case for something, it's much harder to understand like a 12-step kind of investment idea versus like X is good, therefore Y is good, buy Z. In this case, I think that makes sense as well. I do recall from the prior proposal that there were multiple kind of like formulas proposed and like different setups and various parameters that kind of fed into the model, and that was sort of a lot involved there. So just in terms of marketing and understanding, it does make sense when you just have, I shared the chart, very simple, like change to the curve, one parameter, like you're saying. That makes sense. I do wonder on this point about giving stakers more of a voice over the decision, how much that would actually impact the vote or not. Because I do imagine, let's say you are holding some staked SOL via a provider like Coinbase. I do wonder how involved you are in the ecosystem. Like it almost makes you wonder if you're the type of person who's maybe concerned to vote in DeFi governance, would you not be holding your stake SOL with Coinbase, and you would have it on chain and maybe staking it with like a Helios or a Jito or XYZ other validator. So that's an open question. I think I'd be interested to see if it has a meaningful impact on the outcome. Like when we kind of get the results of this vote compared to the prior vote, see if any big entities kind of change their positioning. But I do agree with you that was a major kind of part of the way that the voting went, right? You had some of the major custody providers that either voted all for keeping things as they were, and you saw like more mixed voting, I guess, within kind of like the more DeFi on-chain validator set.
No, you make a great point there. You make a great point. Now that I think about it, like probably that won't matter as much as just like the simplicity of the proposal itself, and the fact that they are just changing one parameter, and the new inflation curve will be equally as predictable as the inflation curve today. Like one of the main like persons who was against the proposal, like the CMD228 proposals, like was Lily Liu from the Solana Foundation. And her main argument was basically that the new inflation curve will be unpredictable, and that's not good for like TradFi appetite for SOL staking, right? So I do think like this totally like solves that concern. And if the Solana Foundation is kind of on board, like unified with the proposal, I think that could yield to a much better outcome.
Yeah, that does make sense as well as a concern, I guess, if let's say even if your business model is predicated on kind of clipping a portion of the yield generated at the staking rate, it's probably more attractive and then also much easier to model sort of like what that forward revenue looks like when you just have a simple curve to look at. And it's like, okay, I understand that the rate is going to change from 4 to 1.5% over the next 3 to 4 years versus, okay, it might be 0, it might be 10, it could be 6. And there's not really a way to know that. It's going to be sort of purely market driven. So yeah, I think a fair point to cover there. It could be that you see a lot more support now, just purely due to the fact that that curve is, it's a constant. It's not going to be a kind of a volatile or changing curve anymore. Shout out to Peaq for sponsoring today's episode. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders, and the first machine economy free zone is live in the Emirates. And it's all happening on Peaq, the machine economy computer. Head to peaq.xyz to find out how you can benefit from the age of automation. That's peaq.xyz. Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Let's jump outside of Solana maybe generally and get to, I think there's a few topics we wanted to cover today. One is maybe a few wrapped up together, but we talked about Humidify and the wet token sale last week. And I think kind of tangentially related to that, I wanted to talk about Jupiter. They've got a few things going on, but one in association with that wet sale, they obviously, Humidify launched wet via Jupiter's new DTF platform. I think it's decentralized token formation, if I'm not mistaken. But either way, they launched via that platform. They also have relatively recently launched and been trying to scale JupeLend, which is in partnership with Fluid as sort of their own lending offering within the space. And so some of the conversation has been around, I guess maybe I should kind of preface this with some points on both, is that at least within this wet sale in the DTF launch, I think there were some obvious pain points that were, to anyone who's traded coins before and is familiar with like attempting to bid a first come, first serve sale on a blockchain, probably some obvious hurdles that should have been expected maybe in the public portion of this sale, in the fact that in their first go around of the public sale for wet, all of the supply was sniped by a few addresses, which maybe should have been obvious to the team. So they had to kind of work to come up and redo that portion of the sale. Ended up doing like, basically, I think their solution was a few things. One, like there was a post from, I think the Humidify team and maybe the Jupiter team talking about certain high priority fee, like payments or TXs were selected against, basically, what you would assume to be our snipers. So that sort of would open up more opportunity for people who are, maybe manually pressing buttons on their phones or their laptops. As well as I think another kind of part of this was just launching it in an unexpected time. They originally had a time set and then they delayed it by 10, 20, 30 minutes, an hour. And then I think at some point randomly before that hour was actually up, they just launched it. So in a sense, I think that was also maybe one of their defense mechanisms against letting it all get sniped. And on the JupeLend side, there's some drama in between the between Jupiter and Camino about, Camino not allowing some positions to be converted over to JupeLend positions, but then some risks on the JupeLend side about how positions are isolated, whether they are or aren't, and how that was communicated. The big takeaway, I guess, within the community has been, is Jupiter spread a bit too thin? Are they just sort of like failing to execute on certain things? And I wanted to get your take here. Like, as you think about all of these products, like obviously they still have the core aggregator. That's a big piece and they're dominant there. The Perps platform is a big revenue driver for them. But they have a ton of products. Like, would you agree with the sentiment that they're spread too thin? And if so, like, let's say let's say you're at Jupiter, like, what do you do from here? What's the right move?
Yeah, I think, like there are like three separate conversations here, right? Like one is Jupiter spread too thin? The other one is like the mechanics of the Humidify ICO and the wet token. And the other one, like we can discuss later, is like the JupeLend and Camino drama. But like answering your question directly on Jupiter spread too thin, I do think they have lost a little bit of focus by trying to be like a DeFi super app that does everything. Like if you think about Jupiter today, they do like the aggregator, which is like their first core product. They do the perps. They have like the decentralized token formation platform. They also integrated prediction markets with Kalshi. They have JupeLend like with Fluid. And the thing about this is that if you think about it, they're like integrating a lot of like for instance, Jupiland, they're outsourcing that via Fluid, because like they cannot possibly take care of everything like they're trying to do, right? Like so you need to have some sort of like external support to be able to do that. And I do think they've had some missteps in the communication. And I saw Jupiter's founder today, Meow. I don't know how to pronounce him correctly, but I saw him be more active on Twitter for the past few days. And I think that's a great thing, because Jupiter was one of the strongest teams on Solana in terms of like communication. And he was the main person like carrying out that public PR. So I think it's great that he's like back in like a social media kind of like public position, because he can kind of like be the face of Jupiter and transmit like constant or frequent updates about the product. I do think like some things about Jupiter do not make sense to me. For instance, they have plans for like JupeNet, which will be like its own chain. To be honest, that's a question mark for me. And if I had to bet on it, I would say that it's probably not going to happen in the next year or so. But yeah, those are my first thoughts as it goes, like as it regards to the sale. I do think that it's not just a Jupiter problem, right? You've seen that with a lot of other sales. For instance, top of mind for me is Mega ETH. I do think they also had some problems like with the Bolt deposits. Someone like sniped them. They forgot like the multisig or something, and someone was able to deposit before time was supposed to start. So I think these things are challenging, right? And I do think like the important part about Jupiter is that they corrected the mistake. At least with the wet token, they corrected the mistake, and in my opinion, the sale went quite well. Like the whitelisted price of the sale was $50 million fully diluted. The public sale was $69 million. And as of like the recording of this podcast, WET is trading at around $280 million fully diluted. So ICO participants are up quite a bit, and I do think like in that sense it was a success at the end.
Yeah, I think that makes a lot of sense. I guess I'd like to get into your thoughts around, you mentioned some of these other products, and like, this seems generally maybe agree with the sentiment that they are spreading too thin. I guess the core question of that would be, their thesis is probably, like you say, to sort of at some point here become kind of this everything app for on-chain crypto. And I think we're seeing a lot of platforms and protocols and teams like try to lean into this in different ways. I think it was actually, as Blockworks Research, one of our kind of core theses for 2025 was multi-product DeFi. And so it makes a lot of sense. If you're Jupiter, you command the aggregator space, and then it's like, okay, what's the next product offering? Can we, verticalize or, generate additional revenues in new streams? But to your point, maybe it's too many efforts at once, or just like not focused enough. I wonder to what extent you think like maybe the thesis there is correct, and it's just a bit of like they need to tighten up the ship a little bit, and maybe redefine what like the kind of the core things that they're working on at the moment are. Because I would agree, like I could list out all of the different types of all the different products, and it would be a very, very long list, and I wouldn't be positive that I know that the level of development that's happening on each of them. For example, like the perps product has been out for a long time, and it actually has a ton of market share, at least within kind of on-chain Solana perps, but there's not like anything new happening there per se. Meanwhile, DTF is one of their like, I don't know what iteration of like providing some sort of sale or launchpad product it is, but they've done several iterations of like a launchpad or sale product kind of many times over. And so, yeah, I guess maybe just speaking to the point about like, are they on the right, do they have the right vision? And maybe we just need to see a little more focus, like what are the areas that you think they should be kind of laser focused on going forward?
Yeah. I'm going to say something. I do think they have the right idea in the sense that Jupiter is probably the team that understands best that owning the end user is incredibly valuable. And this is something that many protocols, like even in the Solana ecosystem, did not understand early on, and that has cost them a lot of market share over the past year. Like probably the easiest example is just Radium, which actually never owned the end user, and then when Palm Fund decided to route graduated coins to their own AMM instead of Radium, Radium lost its largest source of revenue. So one thing that Jupiter does really well is that they really want to own the end user. And I think at the end of the day, their efforts are toward like capturing that user and providing like complementary services around that captured user. So they've released like their own mobile wallet. And like, if you think about like 2023, 2024, probably most people on Solana were like using Jupiter as their main front end, like on a daily basis. So I do think that's an incredibly valuable piece of the stack because they can like decide what to do with that user. Now, are they like having the right idea by providing every single DeFi service they can possibly imagine? That's what I don't know, but I do love that they are trying, right? I think only time will tell if something like Camino ends up winning, where they specialize in, for instance, they want to provide the best credit markets for Solana, or is something like Jupiter wins, where they want to do the everything app for DeFi. I think only time will tell, but I do love like we're seeing differentiated approaches, and I do think like at the end of the day, if one of these products does not work, it's not the end of the world for Jupiter. I think they're risk takers, and they understand that some products may not work as long as like they have a core like cash cow or revenue generating stream, which today is just like the perps and the aggregator product.
Yeah, certainly. I do think that's a great point that it's at least promising, or yeah, maybe promising is the right word, but just to see them kind of continue to experiment on a bunch of these different ventures, like at least they aren't sitting around doing nothing, which I think would probably be more of a traditional concern with a lot of DeFi teams, is build out the moat, kind of like dominate a category and then like not build anything new. That would be more of like a concern of longevity. Like, are they just going to be doomed to kind of ride the wave of this particular sector, maybe even confined to this chain or this particular ecosystem as well. And that's certainly not been an issue for Jupiter. They've been willing to expand. And I think we've seen that generally from Solana teams, right? We've seen a lot of teams in different categories really dominate that particular niche, whether if it's aggregators or dexes or lending, liquid staking, for example, and then try to expand that core offering into kind of other additional products. And Jupiter's definitely been one of the teams at the forefront of that. So yeah, I guess the big question there will be to see whether they can really convert from kind of like just the leader of some of these categories into, like you're saying, maybe one of this all-in-one shop for kind of all things on-chain crypto. Or I guess right now, kind of all-in-one on-chain Solana. And I guess, Phantom is maybe one of the core competitors to them that I guess would pop out in my mind. Is even, I guess this is a bit anecdotal, but like personally, on mobile, I'll use Phantom, but then I won't swap within Phantom. I'll pull up Jupiter and swap within Jupiter within Phantom. So it's, to what extent, maybe new users are directly downloading the Jupiter wallet app instead of Phantom, might be meaningful to kind of track going forward and see if they're getting traction kind of in-housing all of that versus just being sort of like some of the key front ends still for particular use cases. Maybe getting outside of, I love the point you make about going after the end user and like trying to own the user, and then, offer them a bunch of different services to keep them around. I guess I'd love to get your view on Pump and Pump Fun. I know this is one that you were bullish Pump maybe earlier in the year and potentially a holder as well. And I'd want to know like your thesis then and your thesis now, if it's changed, if you're still bullish pump, and why or why not? What are you thinking about it?
That is a great question, and I gotta think how I'm gonna answer this. But yeah, my thesis back then was very simple, which is Pump was doing about $3 million in daily revenue, and the token was trading like at around like 3x price to sales on a circulating basis and 10x price to sales on a fully diluted valuation. So I just thought like with the amount of buybacks relative to the circulating supply of the token, that it will probably go up. And that happened for a little while before like the 1010 kind of crash. In terms of what I think now about Pump, it's interesting. Like I'm gonna say something like which like I don't want to get like misinterpreted, but like I found it so weird that on-chain activity has been down across the board, and like Pump is still doing like $1 million in revenue per day. Because like just like from an anecdotal experience, as you were saying, like I don't know that many people who are still like trading meme coins on a daily basis on Pump. So I do find it like not suspicious, but like just weird that they are still doing such high revenue figures on a daily basis. And I'm just wondering if like what the source of that revenue is, right? Like if it's all bots just trading like the graduated coins, or if something deeper is going on there. I just like I find incredible like their resilience. Don't get me wrong in terms of like the daily revenue that they're generating. I would just like to know a little bit more like the dynamics of it, like how are they still like generating like 1 to $1.5 million in revenue per day, if that makes sense.
Yeah, I do think that's like a hot topic right now. I guess people are asking, when things go down, people ask more questions. They don't ask questions when things go up, right? They're just excited to ride the wave. I think we see that time and time again. I do think it points me back to earlier in the summer, right around when the Pump token actually launched, when they did the sale. And we saw the transition of activity from Pump Fund to Bonk, or Let's Bonk at the time. And there was, within a few weeks span, it was like, 90% market share basically shifted hands from one platform to the other, which is pretty unprecedented. And I think, to me, or maybe to your question about like, how do they still have some of this activity? I don't know that there was anything public at the time, but like, I can only imagine that maybe there are incentives to some of the mass deployers to like make sure that there's constantly new tokens to trade on the platform. Maybe they're credited or given, some token payments or something else to kind of keep up that volume at the time. I think one of the ideas at that time was, if Bonk could get some of those core deployers to deploy on their platform rather than Pump, it spoke to that point about, do you own the end user? And the answer to that question for the launchpads was no. We know that all the trading activity was going through, trading bots, platforms like Axiom, for example, all these other external kind of third-party trading applications where people actually trade the coins. And I think we saw Pump do a lot of things in response to, one, that happening, but also to like this idea of capturing the users. So, they've been working on the mobile app. They purchased or acquired Padre, the trading app. So they've been going after some of those means of like acquiring the actual end user themselves. But yeah, I think maybe some more clarity around how those revenues are broken down would be nice to see. And that's probably maybe the one takeaway that I'm seeing, at least from, CT or like the community right now, is that just like a lack of communication from the Pump team. We'd like to see some more communication from them. And that would probably help a bit, like kind of the public perception at the moment. I don't know if you agree or disagree with that.
No, I was going to say the same thing. Like it's kind of like the Jupiter problem again, right? Like it's just like about communication. Like crypto is very specific, like or like different from other industries, and I don't know why you expect constant communication like from the founder, and like or you get like icky about the token and about the project. So yeah, I think Alan has been like silent for about like I don't know, like 2 months now. And I'm not saying that's necessarily wrong. I'm just saying like crypto Twitter generally finds that like suspicious, and like I'm just like giving like what I think the markets perceives when you have like lack of communication in terms of like in this case in the case of pump. So I do agree with you.
Yeah, I guess at least even just looking at the TradFi world or the equities world for some sort of semblance of standards. Like, I mean, we do get quarterly earnings and results and like guidance towards future quarterly earnings, and so or like forward, next couple of years kind of earnings expectations. And I think that's still pretty immature within crypto. And so it doesn't help like when you're one of the largest launches, like token launches of the past year, to then also have, some of the communication problems that plenty of crypto teams, and token teams have today. It probably just compounds a bit more, and you get singled out a bit more. Interestingly, what Hyperliquid has been doing very well over the past, since launch, and they're also actually a kind of relatively, I don't know if notorious it makes sense in this context because people love them, but they are a notoriously quiet team. Don't tend to provide a lot of commentary or news to the market outside of like, hey, we released this feature, or hey, we made this update today. Now that price is going down, kind of across the board, maybe you'll see some more of that sentiment of like, hey, Jeff, can you speak to us a bit more and give us some more context about what Hyperliquid is doing? But there's a lot of factors there. Sometimes narrative is moved after the fact by the fact that price is going down rather than anything else. So, but certainly communication is something that needs to be worked on, and hopefully with maybe as one part of that Lightspeed Investor Relations portal can be a piece towards working out some of the kinks of communication and investor relations that we have in the industry right now. Shout out to Peaq for sponsoring today's episode. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders, and the first machine economy free zone is live in the Emirates. And it's all happening on Peaq, the machine economy computer. Head to peaq.xyz to find out how you can benefit from the age of automation. That's peaq.xyz. Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Moving maybe beyond some of these core big protocols within the space, I'm curious, maybe just generally, what are you looking at within Solana today? Where and what are you interested in? I know you've kind of always been a Solana DeFi guy, looking at different things there. I'm curious to know, like, what are you looking at? Maybe are you buying things? Are you farming things on chain? Like looking for rates on stable coins? Like, what are you doing and where are you doing it and what's interesting?
Okay, so a bunch of stuff, but like number one, I think I'm really excited about like MetaDAO still, and like this ownership coin meta. Like I think embedding token holder rights into the crypto assets is an incredibly important thing for altcoins, and it's probably like the highest leverage thing that's going to happen. Like if you want crypto assets or like tokens to be an investable asset class. So I do remain excited about MetaDAO. I think like the Ranger ICO is going to take place soon. So that's something that I'm looking out for. Ranger, for those not familiar, is like kind of like a perps aggregator platform on Solana, and it's actually quite a nice user experience. Like outside of MetaDAO, I think I am increasingly excited about like what I would call like DeFi 2.0 to 2.0 within Solana, which is like this new cohort of applications that have gained significant traction over the past few months, even in the face of the latest market drawdown, right? So even though like Sol has been down like 40% since September, protocols like Loopscale, Exponent, and Hilo are at all-time highs in terms of, or near all-time highs in terms of like TVL, which to me signals like uh, decreasing reliance on just Sol doing well, and that's an incredibly exciting thing for me. Exponent is kind of like one of the most exciting projects that I've been like interested in over the past few months. They're kind of like, I would explain it as the pendle of Solana, where you have like PTs and YTs is just like a yield stripping mechanism, and like you can like speculate on yields. And I think like as more yield bearing assets come on chain for Solana, Exponent will become an increasingly important um, project within the ecosystem. You have seen a lot of yield bearing assets come on chain over the past few months. Off the top of my head, I can mention Onyx from Onre, which offers like uncorrelated yield to crypto markets via reinsurance backed yields. You also have like the recent Prime integration with Camino, which offers like yield from US real estate. And then you also have things like Hilo, right, which is a bit more crypto native, but still like a new form of like a yield bearing asset via the high USD and XOL mechanics. So I do think like yield bearing assets is one of the most exciting things happening on Solana. And the third and final thing that I would mention is now that we have like prop AMMs dominating highly liquid pairs for like spot trading, I am really curious and wondering if you can kind of use that prop AMM design for a perps DEX, and if that can be like a huge unlock for Solana going into 2026. So I think like one of my predictions going into next year is that we'll actually see perpetuals decentralized exchange on Solana that is using to some extent prop AMMs for like the liquidity.
That would be very interesting. I want to maybe go back to what you were saying about Exponent, for example. And I'm curious, you mentioned new forms of yield-bearing assets coming on chain. I'm curious, like, as far as like the breakdown there, how meaningful are those as a portion of like TVL on platforms like Exponent relative to like, I guess sort of my expectation would be that things like Sol LSTs or even like JLP, for example, might be some kind of core assets and drivers of activity there.
Yeah, that's a great question. So Exponent, like I might be getting my like timelines wrong, but I think it was in June. Like they broke 100 million in TVL for the first time, and the majority of that TVL was derived from Fragmetrics, Fraxel token, which was kind of like restaking farming, and that was driving the majority of the TVL back then. When Fragmetric TGE'd and that expiry like sort of like matured, you saw a big drop in TVL. Whereas what you're seeing today with Exponent, like they're back at $120 million in TVL or so. But the majority of that TVL is actually from USD denominated yield bearing instruments as opposed to just like LSTs and JLP. They actually haven't even like onboarded JLP yet because of, or wait, I might be getting this wrong, but I don't think JLP is a significant portion of the TVL. Like the majority of their TVL is like from yield bearing asset. I think like Solstice USX is one of the largest TVL components as well, which is like, kind of like USD on Solana, if you want to look at it that way, like kind of like Athena on Solana.
Okay, so more USD denominated kind of asset exposure within these platforms, rather than Sol linked outside of the kind of what we saw with the LRTs or the kind of the restaking tokens previously in the year. Interesting. On the perp DEX point, Yeah, I think there's maybe a few angles there, and I think we've discussed it in a little bit of detail, but it would be interesting to see if kind of the prop AMM, revolution or just their rise to dominance on Solana make for a very favorable environment for a few of these categories of whether it's trading of stocks on chain or equities on chain, whether they be a spot or perped assets. And same goes for maybe many other, I think if I look to something like Lighter and Hyperliquid and Ostium and some of these platforms, we're seeing more and more interest for, equity perps, like Forex markets, a bunch of these other classes of things that are like non-crypto assets. And so I wonder if, like you're saying, maybe prop AMMs can lead to kind of a new design for perp decks to take off. Maybe that also kind of pairs with these new assets coming on chain and being tradable and sort of opens up and makes those markets, much more liquid, and like worth trading versus, I don't think anyone necessarily wants to trade a tokenized stock spot on a passive DEX where you get slipped, maybe a few percent because there's limited liquidity. But if some of the prop AMMs were pricing, Tesla stock on chain, for example, that would be much more interesting to get like a competitive kind of quote for it. Just generally like wondering and curious and, maybe hopeful that that might drive kind of like a bunch more of these types of asset classes on chain onto Solana and maybe onto, like you're saying, potentially whether it's a perps platform or just generally into like spot trading on chain. Because I think we haven't really seen a takeoff yet for like X stocks, for example. They maybe get into the 7-figure to like maybe low 8-figure daily trading volume on Sol. So if prop AMMs or just bringing perp dexes with those listings as well onto Solana are potentially an unlock there, and maybe we could see a lift across the board.
Yeah, I totally agree with that sentiment. I think that Solana has probably like one structural advantage versus Hyperliquid for like equity perps to take off in the ecosystem, which is what you mentioned regarding X stocks and the composability of the ecosystem, right? So I can imagine it would be easier probably for market makers or for like delta neutral participants to hedge like their perps positions via the X stocks instrument, because so you have like both the spot and the perps on chain, as opposed to Hyperliquid where you only have like the perps product but you don't really have like a spot product to like hedge or do any other sort of like interesting trading strategies, right, that involve like both sides of the leg, if that makes sense.
Yeah, that makes complete sense. I wonder to what extent, like I feel like this had become a very core thesis for maybe many within the industry, that like this race to capture equity perps activity, and yet like equity spot on chain is kind of like fallen out of the conversation. But to your point, you probably need a little bit of both there for maybe like a healthy trading ecosystem of those assets. And so it'd be interesting to see how maybe some of these platforms service kind of maybe both sides of that equation. Of course, venues like Hyperliquid and now Lighter just recently launched spot trading. They just have ETH today, but like they do have spot trading offerings. But yeah, the equity products, the X stocks and related, are not listed there yet, but the perps products are. So it could be an unlock for Solana that to have both of those available, where other venues are kind of lagging behind in the sense that they're just focused on the perp side of the equation right now. Cool. I guess maybe before we close things out, is there anything else that is top of mind for you within Sol that you're looking into right now that's maybe you think is under discussed, or just something that you think is kind of a core part of Solana's potential success going into 2026? What are you thinking about? What's critical for Sol going into the new year?
I think that one of the main themes in 2026 will probably be like, how do we make Solana like the place where on-chain price discovery takes place? So today, the majority of price discovery takes place on centralized exchanges. And I think over the past year, you've seen increasing like efforts from both Hyperliquid and Solana to like have that happen on chain. I don't think we're quite there yet, but I do think that if Solana can be the place where on-chain price discovery happens, then they have a real shot at like fulfilling like this decentralized Nasdaq kind of like vision. Like, I don't know if that's the right description to call it, but I don't know how else to call it. But I do think like having price discovery on chain for Solana is probably one of the most important things for the ecosystem, and it's probably one of the most important things for REV as well. So for network revenue. So we talked at the beginning of the episode about like REV declining over the past 4 months. I do think that if Sol can somehow become the place where on-chain price discovery takes place for other crypto assets, that can drive meaningful amounts of volume and revenue back to the network.
Great take. I think makes a lot of sense. And we saw, I mean, I think we've seen kind of the excitement or the push for listing of new kind of native spot assets. May have, I think we talked about this one last week, but yeah, the trading of Monad on Solana, for example, the growth and dominance of prop AMMs are obviously central to this story. And probably another question mark or big piece of this potentially could be, better offerings or, more capable perp dexes on Solana to service more of that sort of, futures perpetuals trading activity that still centralized exchanges are known and dominant in that realm of. But at least to this idea of like price discovery happening on chain, I feel like we're starting to see that at least with the Sol USD pairs. We've seen that demonstrated at least by the prop AMMs relative to like Binance volume of Sol USD pairs. Maybe it's a matter of time or a question now to see if that will extend itself or lend itself to further assets beyond just Sol. So, other assets on the chain today, or if other, assets need to be bridged onto the chain, other native assets need to be bridged in and then made tradable in a more liquid manner via prop AMMs. That might end up being a solution to kind of capture more of that trading activity and maybe drive some of that price discovery on chain. So time will tell. We'll have to see. But yeah, I think a lot of these like different stories kind of tie together, and it's really interesting how they're sort of all curtailing into one kind of big, movement for Solana generally.
Yeah, I totally agree with that. I think the last thing I'll add there is like you've already kind of seen these, like as you mentioned with the Sol USD pair, like the SEX DEX arbitrage was previously happening exclusively on centralized exchanges like Binance. So like if, for instance, Sol was trading $5 lower on Meteora, let's just say, than on Binance, then you like buy on Meteora, move that to Binance and sell on Binance. Whereas today, what you're seeing is that the SEX DEX arbitrage is actually being captured by prop AMM. So if Meteora is offering, for instance, a lower price, you're seeing prop AMMs update their oracles like very quickly and like buying on Meteora and selling into the prop AMM to capture that spread. So I think that you've kind of already seen this transition from like just centralized exchanges to like prop AMMs, and eventually you'll probably see like on-chain price discovery happen like on Solana, hopefully within the next like year or 2 years.
Nice. Well said. Well, I think we can close things out there. Like you just covered, I think plenty of things to be interested in, excited about for Solana, the Solana ecosystem. Plenty of things, and old teams, new teams to follow and keep up with. As mentioned at the beginning, this week is Breakpoint, so that's probably one of the venues and places to hear about new things happening, exciting new announcements. We'll probably hear from some teams plenty of teams within the ecosystem that either new product announcements or new path visions for 2026. So tons to look out for there, and you'll hear more from us next week. Hopefully, I'll bring on Dan Smith. I wish I could make this a promise, but he's a busy man. But I'm hoping I can bring him on next week. We'll talk about some of the new Lightspeed Investor Relations portal and dig into maybe some more of the detail in the weeds on Prop AMMs and go deeper there, because like we've been talking about all episode, also a pretty core piece of the Solana story right now. So as always, Carlos, thanks for coming on. Great conversation. And to the listeners out there, we will see you next time.